I'm here to talk to you about two type of life insurances that I believe everybody who is working and has a family should get. Don't let anybody trick you. It's never too late to get life insurance. And more you wait, more you get older, more your premium is expensive. And quickly, these are critical illness cover and income protection insurance. Critical illness cover is a life insurance that pays out a lump sum when you are being diagnosed of a critical illness that is stated in the contract. And these are critical illnesses, and some of the examples are like stroke, heart attack, kidney failure, paralysis, blindness, or loss of limbs, for example, or some types and stages of cancer, and some other conditions such as multiple sclerosis and many more. But it's always detailed in the contract, because I know, especially for people like me who is a true believer and a strong Christian, I know we never hope for something bad to happen. But imagine if something happened to you, maybe in your place of work, or you have an accident or whatever, and maybe you have like something like a mortgage or something to pay for, and you can't provide for your family anymore. How are you going to deal with it? So it's really critical that you get a life insurance that can protect you and your loved one in case if anything happened. And critical illness cover, it pays out a lump sum, so it pays out once, and it could be a huge amount, and that's it. So once it's paid out, it's cancelled. It's a long-term insurance, and the lump sum that it pays out is also tax free, so it's quite good, and I believe it's something you should consider. And the second one is income protection insurance, which personally I prefer, because this insurance is also a long-term insurance. But the way it works, in case of an illness or whatever, or an accident, or whatever condition that is described in a contract, you get paid. It's like a salary, so you get paid at an amount that's almost equivalent to the amount that you were getting paid while you were at work, whilst you can't work. So let's say, for example, you go something happens to you, and for like let's say 12 months, 5 years, 10 years, you can't work because of a developed disability or something like that, then this insurance will pay you every month. So it could be monthly, it could be yearly, it could be whatever, depends on what you decide with your insurance provider. So it will pay you continuously until you're able to return to work, or until you're able to retire. So I prefer this one because it's not like a lump sum. Another good thing about this policy is that if before, for example, you were able to work 40 hours per week, but due to the illness, you can't work 40 hours anymore, but you can now work 20 or 16, then this insurance pay you the remaining part that would have made up the amount that you would have received if you were working on 40 hours per week. I'm not giving you financial advice, I'm just educating you. If you've got further comments, you can feel free to leave a comment in the comment section, and I'll be glad to give you further advices for free. Thank you.